Okay, everyone, it's time for another daily trade video. This is, I think, take number 4. First things first, we just got off the teleconference call for the World Summit 2. We're calling this the Recession Breaker. It's going to be in Orlando from April 30th to May 4th. I am not sure if the teleconference company recorded it or if we are going to be able to get the recording to you. I'll check with my team to make sure that if we have a link, we can get that out in case you weren't there. If you do want to register for Orlando, the link is right there underneath this video. You can click on that. You'll get taken to the registration page. Hopefully I'll have a letter describing everything that will be at the Orlando event up by tomorrow afternoon. But if you want to go ahead and register, go ahead and click through there. Again, if you cancel within 15 days of the event, we'll go ahead and give you a refund, a complete refund of your money. Otherwise, we'll just give you a credit against future events. Now, let's talk about the markets. Today I was talking with Jim. We had a very good conversation about trading and some of the psychological issues. And one of the things that I shared with Jim is I'm personally pushing myself. And one of the things that I've decided to do, especially since interacting with the crew and dealing with traders on a very personal level, has been to really question why I do certain things. You see, when I first started trading, I always had this habit of when I got profits, boy, I would rake those things out of the account as soon as I could. And in fact, in the early days, before I got to the institutional desk at my broker, Man Financial, their risk control manager called me up and he said, "What on earth is going on? What are you doing with all these wire transfers?" And I said, "Look, I don't want to keep more than a certain amount in my account. So if I make profits for the day, I pull it out. If I don't make money that day, then I wait until I come back to even and then make a profit before I pull it out." And I was very, very consistent, especially back in the late 90s, coming into 2000. You're practically minting money because the market was moving so much. Especially once I really started to get the hang of things and it wasn't just beginner's luck. And once I developed a strategy and started talking to more and more professional traders and my system started to refine itself, but anyway, moral of the story was it drove the guy nuts. But for some reason, I had this thing in my head. Now, in the Forex market, there's a practical reason for this. You see, Forex brokers are not regulated. So there's really no need to keep $100,000 or $300,000 in the account. And this is something that I talk about in the videos and elsewhere. So, for example, let's say I had $100,000, and this was money that I wanted to trade. Well, what I would do is I would figure out, first of all, how much of this $100,000 am I willing to risk on any one trade. So let me get my calculator, $100,000 times 0.03. So that means that I could risk $3,000. $3,000 in risk. Now, depending on how I wanted to trade, you can see here that means I could trade 3 regular lots, right? Now, and if you're confused about the regular lots, that's on disc 2, by the way. So 3 regular lots, or I could trade 30 mini lots. Again, if that's confusing, review disc 2. I go over that in great detail. Now, let's say I wanted to trade more. If I wanted to trade more size than that, then I could simply put more money into the account. Now, I'm not saying I want to put the whole 100,000, but let's say I wanted to put $10,000 in the account. Again, I'm trading as if I have 100, but the 100,000 is in a bank. It's in, it's in a CD, or I've got it in some kind of foreign bonds, maybe New Zealand bonds or something like that, earning me 7.5% or 8% interest.